So I think first, the policy on Friday, we're going to see a rate cut of 25 basis points. That's my view, our view. And I think there are certain, maybe a very minority level of people who are expecting maybe 50 basis points as a surprise. But I'm not very sure about that. So I do think that it's 25 basis point rate cut. And like you rightly said, when you look at inflation for the next 12 months, Manoj, 9 out of the 12 months, we expect inflation to be below 4%. And we expect the entire year's average to be in the region of 3.6 to 3.7%. And this is happening after a long time. We are seeing food inflation at less than 2.5. We are seeing core X gold also in the 3 handle. It's only when you include gold prices, you're getting core inflation at higher than 4%. So net, I think it's a very, very, what should I say, happy prognosis from a macro perspective that inflation is very well contained. Add to this the fact that the external factor, like I spoke about, current account deficit. So there are only two things that the central bank will need to worry about when they're cutting rates. One is inflation and the other is current account deficit. And current account deficit is also well contained. Actually, there is nothing to really fear. And this is one of the reasons why the differential between the Fed rate and the RBI rate has been coming down dramatically, because in the past, when differential comes below a particular tipping point, if the current account deficit was on the higher side, then you will fear that there will be a run on the INR and hence you will not be able to cut rates. This time around, that fear is not there, and that's one of the reasons why we have been able to cut. So if you look at 3.6 or 3.7 as the average inflation, and you look at a 1.5% real rate, I actually think the governor has spoken about a 1.2 to 1.7. So even if you think about a 1.7 real rate, which is at the higher end of the spectrum, you can argue for a 535 or a 540 kind of a repo rate, which is 60 basis points lower. So we believe that they are going to do a 50 basis point rate cut over the next two policies, 25 in June in this Friday and 25 in August. And along with that, they will keep the liquidity surplus. They're already kept the liquidity at a substantial amount of surplus. We are close to 5 lakh crores of surplus from a durable liquidity perspective. But I think this durable liquidity will keep coming down as forward outstandings of RBI keeps maturing. Yep. So I feel that they have actually infused much more liquidity than what was possibly necessary in order to take into account this forwards outstanding. But even when it matures, I'm pretty sure that they are targeting a system liquidity surplus in excess of 1% of NDTL, which is excess of 2 lakh crores. Yep. So from that perspective, I think RBI has kept a lot of liquidity and it is likely to keep more liquidity. So what it will do is also keep the interbank rate a little 10 or 15 basis points below what the repo rate is at that particular point of time.